We are taking you behind the scenes of the National Institute for Data Science and Artificial Intelligence.
With unprecedented access to the scientists pushing boundaries and shaping our future, this show will take you to the cutting edge and beyond.
And whether you're an expert yourself or just science curious, this is the show for you.
Welcome to the Turing Podcast.
Hello everyone, welcome back to the Turing Podcast. I'm your host for today, Ed Chalstrey, and I'm joined by Dr Adrian Weller and Kate Platonova. Adrian is a Programme Director and Turing Fellow, leading work on safe and ethical AI at the Alan Turing Institute, and a Director of Research in Machine Learning at Cambridge, and also a Programme Director for Trust and Society at the Leverhulme Centre for the Future of Intelligence. Kate is a Chief Data and Analytics Officer at HSBC, looking after the entire data landscape at HSBC, including analytics and AI. Adrian and Kate, welcome to the podcast.
Thanks very much. Glad to be here.
Yeah, very happy to be here as well.
So I'm just going to start with some introductions from both of you. So I think I'll go to Adrian first. Adrian, tell us a bit about your background, how you came to be in your line of work, and how did you end up at the Alan Turing Institute?
I have a slightly unusual background, which ties me actually nicely to Kate in some ways. Though I started as doing undergrad in maths, but after that I went straight into the world of finance, and I worked in investment banks and hedge funds, mostly in New York, a little bit in Chicago and London. Did that for about 15 years, had a really great time, lots of great people, but decided that I'd had enough of that at a certain point, and left finance. I had a long non-compete period to think about what to do. But I got married, we went traveling, we had a great time, and I'd always been interested in potentially coming back to academia, so I thought I'd give it a go. And so I as the Americans say, went back to school as a mature student. And at first I wasn't sure if that would be really, really difficult or not so bad. And we also had little kids at the time, so it was a slightly unusual setup. But I really enjoyed it. So I did a PhD in machine learning at Columbia in New York, really liked that, and was delighted then to be able to get the chance to come back to the UK and get a position at Cambridge in the machine learning group with great colleagues there. So I have... I've somewhat specialised in an area which is still pretty broad, an area that I would call perhaps trustworthy machine learning or trustworthy AI. Sometimes goes under different names like safe and ethical AI or responsible AI. But this, broadly speaking, means how can we try to help ensure that the systems which we design, develop, and deploy are going to treat individuals and society well, not take advantage of people. So it covers topics like transparency and explainability, fairness, robustness, privacy, and a bunch of other areas. What I mostly do is focus on trying to build the technical fundamentals to enable those kinds of properties. But I really recognize that it's key, if we're going to do that properly, to connect well with practitioners, users, and affected stakeholders so that we understand what the real world concerns are. And then also, I try to help a bit to connect to policymakers and regulators so that they're going to, whatever it is that we decide together as a society is what we want these algorithms to be able to do, it's possible to monitor and enforce that. And one of the projects which we're involved with at Turing, together with HSBC, is looking exactly at these sorts of areas in the area of finance. And so it's wonderful to be able to talk about this with Kate today.
Brilliant. Yeah, thanks for that, Adrian. Kate, perhaps you could tell us a bit about your background, how you came to be doing what you're doing today, and a bit about your role.
Thank you, Ed. So my path was a bit windy as well, I guess, to my current role in what I do now. So I started. First of all, I'm from Russia. I went to school in the US as an exchange student, and I kind of had no designs to stay there, but ended up following the peer group, taking some standardized tests, and finding myself part of an American university and getting my undergrad many moons ago. So my first degree is actually in marketing. So I had a career change, which was driven by my curiosity around computer science and how software is actually being designed and developed. And then I went back to university, got a degree in computer science at that point in time, and started working for financial services industry. So my first job was at JP Morgan in the US, and then I've been to a few other banks since. And my roles have always been very data flavored, right? I was a software engineer. I sort of done all the different jobs, from installing a database and buying a server and configuring it to then writing lots and lots of SQL code by hand, doing a lot of extra transform and load ETL development along the ways, and also taking users' requirement, probably working with the likes of Adrian to understand what do business people need to see, how are they going to be data-led in their decision-making, and then how do we turn it into technical infrastructure and visualization and insights from the data available to them. So that's sort of been my path. I then kind of progressed from software engineering to architecture. So I was a data architect in financial services, and I joined HSBC 5 years ago as chief data architect, and then ended up in my current seat. So it's a bit interesting for me to be the business of data and analytics rather than the tech person. But I work very, very closely with the CIO community, with our technology department, to design and build the overall ecosystem that allows data in HSBC to flow freely, to be clean, to be safe to use. And what Adrian's saying is very key to my ethos and where I want to take this space as well. Banking is a business of trust, right? You wouldn't put your money with somebody who you inherently do not trust. So we have a lot of fiduciary responsibility to our customers, to the regulators, to the communities that we serve. And as we introduce more and more straight-through processing, more and more algorithms, more and more artificial intelligence into how decisions are made in the bank, it has to be explainable, it has to be trustworthy, and it has to work off very well understood data sets, so we can correct for any bias and make sure we understand how the algorithm came by the outcome that it produced. And that's what I've been working on in this space. Outside of HSBC, I've been very privileged to be a part of a few boards. Tech Moms is one of the highlights of my board portfolio life, working with Dr. Sue Black and empowering moms that might not have had a chance to interact with technology to do so. So it's been really great.
Nice. Thanks, Kate. Thanks for that bio. So I have a question now. We touched on briefly there. How AI is going to be used or is being used in financial services. But before we get to that part, I'm interested to know, what kind of data are we typically thinking about in financial services? What is the kind of data that's useful for HSBC, for example?
Well, let me kick off with some fun stats. Right now, we have over 300 petabytes of data across the firm. I'm old enough to remember when the 30 terabyte data warehouse was a big deal and you bragged about working on something that large. But 300 petabytes is where we're at. It is growing.
What is can I ask what is a petabyte? I'm thinking is it 10 to the 15 or 18 or something? I don't know.
Well, let me give you a more sort of an image to think about, because exactly the petabyte is hard to imagine. But if we convert all that data into text, it would be more text than all the books and all the great libraries of the world combined. That's how much data we've got kind of going through our plant and our systems right now. And what it represents is a mix. There is some structured data, your usual suspects, the customer account information, my name, my passport details, my mortgage, so on and so forth. A lot of unstructured data from information about our customers, their financial transactions, the contract, the conversations with our customers when you call the call center. And increasingly, we're also having to understand more about the impacts our business and our customers' business are having on the world. So we have some very exciting new data sets that we have to consider. For example, data on emissions or environmental activities, deforestation, all part of our sustainability agenda. And those are new data sets to financial services. And there's a lot of unstructured data that we haven't considered yet. And what we are doing with all that data is obviously using tools like machine learning, like visualization, to understand it, to find patterns that are not visible to a human eye, and try to make some predictions based on that data. So because of the scale and the breadth of what I just described, humans are not well equipped to do so unaided, and you do need algorithms to help them out.
What are some examples of the kinds of decision making that those kind of methods can help with? I mean, you mentioned that it's just an enormous amount of, in many cases, unstructured data. But yeah, what are the kind of insights that are adding value to I guess in the case of HSBC, it will be your customers. How are you able to help them better by using those kinds of methods on that data?
So a couple of examples that I could think about is back to that sort of trying to figure out and predict a certain course of events to a degree. Obviously, we can't predict anything perfectly, but one example that we have is around supply chain resilience. So HSBC is the world leader in trade finance. That's our heritage. That's how we're founded to finance trade activity at the time in Hong Kong, and that's been our flagship set of products since. So what we do is we provide loans to finance the import of goods and materials, and then in turn, those goods and materials might be turned into something else that gets sold on. So for example, it's estimated that about 90% of container ships heading from Asia contain goods that have been in part financed by HSBC. So we have a very large footprint that is part of the overall global supply chain. It's a very complicated network, and we felt that during COVID, when supply chains are disrupted, or during some recent geopolitical events, everyone can feel it on in the shops and not being able to get certain goods or certain services. So what we've been doing is we've been combining the data from our customers and in part from their suppliers as well to actually model very complex flows of trade and try to identify risks involved in those supply chains. And then, if you're proactive about managing those risks and identifying them to customer to see which links of the chain might need strengthening, that's a pretty powerful way to analyze that. We use graph technology to visualize those networks and flows, and then try to identify some problematic dependencies and give our customers heads up.
So this will kind of be like graphs of sort of how supply chains themselves work. So you can see any sort of bottlenecks that might be occurring, this kind of thing.
Yes, and also the handovers from one link of the supply chain to another, and when there's financing that needs to happen in order to unblock something. So there's multiple variables that you can look at, but it's that building that network that you can then do analysis on that's quite interesting. And helps make more informed decisions across different parts of that supply web, if you will, not just individual chains. And then the other example I can think about that benefits everyone is obviously we have a very large technology estate, like any large digitally enabled organization, and we make tens of thousands of system changes every day. One of the algorithms that we deployed, one of the models, is an AI model that has a look across all the different changes that are about to apply to our production environment and tries to predict if a change is going to result in failure. and if there will be impact to customers and any disruption. It's in its infancy, so we're developing it still and training the model, but some of the early results have been very promising. So we're able to identify and isolate and stop the changes that might have a disruptive impact from going into production, and then rework it and revisit it. So that's kind of what we're doing.
Awesome. I guess it's difficult to tell when especially when you're not an expert. If you're imagine you're just a listener of the podcast right now, and you're thinking, well, I mean, it sounds amazing that the researchers and companies have these clever AI systems in quotation marks, that they're somehow able to get these insights from data that you wouldn't be able to get with conventional methods. I don't know if either perhaps Adrian, you want to come in on this, what are the sort of advances in AI that have happened in recent times that have come out of research that companies and indeed scientists are able to draw upon to make decisions they wouldn't have been able to make previously?
That's a great question, Ed, but I wonder if we can maybe work towards it, if it's okay.
Yeah, go ahead.
By me asking Kate a question or two, because I'm really is that all right?
Yeah, go ahead.
Of course, yes.
So I'm really interested in what you're saying about resiliency of trade infrastructure and those sorts of topics, which of course have been such an important issue through the COVID pandemic and also looking forward. So I'd love to hear the sorts of things you're able to learn, or are there good examples of situations you could identify of potential risks, maybe to, of course, to help your customers, but perhaps also to help more broadly and help governments think with their planning.
Well, we've definitely learned quite a lot during the pandemic. And I think one of the things we have learned is that there's certain networks and ecosystems that are very difficult for human mind to not only comprehend, but to analyze. So I can see a shift in that literacy that, in some cases, artificial intelligence and models powered by machine learning are much better, and folks are starting to trust them more to make the right decisions. Some of the things I think we also learned is definitely around the fragility of our world, our health, not to be super sort of molten here, but we all saw how fast a virus can bring the world to a standstill. And only through advances in science and in sharing of data, understanding the data as it emerges, and then reacting to it and drawing an insight, we're able to develop vaccines and to start really combating the situation. From our side, from financial services side, I think what we've seen is great disruption in the markets that resulted, where previous methods of computation, previous models are not necessarily holding up in such volatile environments. So we have to think of our risk modeling in quite a different way and apply different techniques in order to cope with what's happening in the markets and take into account many more variables than we maybe historically were looking at. And I'll come back to our net zero ambition and the ESG agenda, if you will. That's another part of our strategy that I feel got expedited by the pandemic, right? People started taking not only great interest in how we impact the world as a large company and what is our footprint, what's our supply chain, and how do we get that to net zero, but across our customers' financed emission space, and how we can calculate and help our customers transition. How can we understand where to place investment and what technologies to invest in order to facilitate this transition. And it felt like it sort of got a new injection of energy into that space. And one of the things, Adrian, that we haven't talked about is at length is this new data sets, right? So we have new techniques. The tools got better over the past 20-some years that I've been in this space. The technology got faster. We have cloud. We have many other techniques that we didn't have before. And we can compute at much greater speed on much vaster data sets. However, the data sets became more diverse as well. At HSBC, protecting the data that's entrusted to us by our customers is the first pillar of our overall data strategy. We take it very, very seriously. As I said earlier, I'll say it again, banking is the business of trust. And we have to trust in our controls and systems and be trustworthy to folks that decide to bank with us, to do business with us, and keep not only their money, but their data safe and secure. And it's not just about cybersecurity aspects of it. I mean, we take cybersecurity very, very, very seriously and take many measures to ensure that data and systems are protected. But the other side of it is, how do we use the data that's been entrusted to us? And how do we make sure that we have appropriate consents and we can explain how we use the data to generate an insight and get to a certain outcome for a customer? And how do we make that super transparent and clear so anybody can understand what has happened? So you don't need to have a law degree to read all the disclaimers and disclosures. And if we want to benefit from technology like artificial intelligence, then we must have data that is not only well managed internally, but is also of known quality. So very often I get data scientists who are super excited about the actual model, and they give less thought about the data that's gone in to train this model and where's this data from, how good is it, do we know, do we not, or are we just kind of hoping that it's all right? And big part of what we do is making sure that data is fresh, clean, traceable to source, and is safe to then use in insight generation. What it means also to us as a bank is complying to many regulatory requirements. So banking is one of the most heavily regulated industries in the world. We do business across more than 60 markets and territories. So we do have a lot of different parts of the regulatory landscape to comply with. And we're quite proactive in our dialogue with regulators to not only showcase our thinking in this space, but to continuously sort of understand where the regulations are going and how we can be proactively compliant before we get told to be compliant. And trust also means that the data is used in an ethical way. At HSBC, we take the business of data ethics quite seriously as well. We were the first bank to publicly share our ethical principles, and we really wanted to partner with the likes of Alan Turing Institute to advance the conversation about data ethics across the entire industry, not just HSBC itself, but across financial services and across different fintechs and financial service providers that are newer on the market and perhaps haven't considered all of those implications yet and haven't really encountered the breadth of regulation that we've had. And then the second ingredient of it, right? So all the controls, all the infrastructure has to be sound, all your policy has to be super sound. But the literacy around data topics has to be quite high in order to make sure that things stay secure, stay protected, and folks are not just complying to the letter of the regulation, but understand the spirit and understand our ethos around what we're doing with data and why we're doing it. So the second pillar of our overall data strategy is connecting our people. It's all about culture. It's all about building the data-led culture, making sure that board to branch, everybody understands how to play their position and what their accountabilities are in relation to our data landscape. And it's uplifting data literacy, not only for data professionals, but everybody else in the bank, including our customers, and making sure that we have that very proactive dialogue with them. We have over 250,000 colleagues across the globe. And my challenge, and it's the fun part, is that I have to make sure that they understand not just the fun parts of data, not just the analytics and data science side of the house, but they understand the basics. If you put incorrect name or occupation for Kate or her income level into kind of the front of the process, then her outcome across her landing process might be very different. So how do you connect kind of the abstract data concepts to the actual customer outcomes, and how do you educate this quantum of people and get them excited about it, and shift the culture to ensure that we're data-led in our decision making? That's kind of the big fun challenge that we have.
So I'm just wondering, you mentioned the term sort of data literacy, and I guess this is something that I guess if the public in general would help them in many aspects of life, not just interacting with any particular organisation. But what are the kind of things that help to improve that data literacy, to make it the decision making process more transparent to them?
Well, what helps me, I guess, is break down very technical sounding concepts into something that's a lot more familiar, and use sort of a worked example. So most folks can relate to an example of opening a credit card or applying for a mortgage or a loan. And you can sort of think through scenarios of what data gets shared with whom, for what purpose, and then do you understand as a customer what the bank just said back in their disclosures and consents, and if you didn't, then challenge them to be clear about what are you going to do with my data, how is it going to be used, how was the decision made, and so on and so forth. So it's kind of taking accountability, I guess, for understanding as a digital persona what data about us do we have, who do we share it with, and what is that entity that we share the data with is going to do with it, and am I comfortable with those usages or not, and what's the kind of the fair exchange of value here. If I've given up my email address, what am I going to get back, and is it really the thing that I want to get back, or is it something that I didn't order and didn't ask for? The privacy topics are fascinating, because there's a lot of philosophical difference around the world on the topic of privacy, and what sort of what's primary and what's secondary in that conversation. There's a lot of emerging regulation that's quite interesting as well. So I think we can spend a whole other podcast on just that.
No, of course, it's always a combination of like policy and technology when it comes to things like privacy and security. And of course, behind policy, there's philosophy, which of course is going to be different in different parts of the world. But I wonder, Adrian, if you could speak a bit to sort of the emerging technologies around privacy and security, and and how these factor into the kind of things Kate's been talking about.
Yeah, Kate's brought up so many important issues. I've taken a few notes. I hope it's okay. I'm gonna maybe speak for a while, going through some of the things she's touched on.
Yeah, absolutely.
And I'll try to weave themes of privacy technologies into it. So I'll start maybe by kind of rewinding a little bit to when Kate was talking about the fascinating opportunities for HSBC to use their data in order for them internally to be able to come to exciting conclusions, for example, about resilience of trade networks. We're able to do that, as Kate was saying, much better than before, because there's more data than before, and there's much more computational power than before, and methods have improved somewhat. So all of that makes that easier. But even though HSBC is a huge global bank, which enables them to do a good job of that, you could do even better if there were ways to combine their data with the data of other organizations. And that raises interesting questions about, well, are there ways that can be done in a safe and ethical, trustworthy manner to enable everyone to benefit without raising concerns, appropriate concerns that people would have around privacy? And that lets us maybe start to have a conversation about methods like federated learning, secure multi-party computation, which are applicable here, but would be also applicable in many other settings. So actually, maybe we'll start by having a bit of a conversation about this, because I think it's a really interesting area where Turing is collaborating with HSBC to see how we can be helpful. So this area of how can we try to help organizations that have their own data, combine that with other organizations' data in a safe, ethical way in order for everyone to be better off, is a really important theme that appears in many different sectors. So clearly in finance, as we've touched on, but also many other areas. For example, in healthcare, it would be wonderful if different hospitals who have their own data sets on their own patients were able, in a, again, appropriately private way, to share data about their patients with other hospitals, and together you could learn a model that could benefit from the data across all those different patients who might be coming from quite different demographic backgrounds. And if you only had data from one set of them, you might develop a solution which wouldn't work very well for others. And the more data, roughly speaking, typically the more data you have, the better you can do, particularly for minority groups, which by definition are the ones where you have the least data. So typically it will help them most if you can do this sort of thing. And one very exciting technical development over the last 10 to 15 years has been the initial demonstration that it's possible to do computation in a way which is guaranteed to be secure, in a way that I'll define a bit more carefully in a moment. But to do that requires a significant amount of additional computational capacity. Over time, as our computational abilities have increased and as we've improved methods, it's becoming increasingly practical to consider doing these kinds of things at scale, which is very exciting. So let me try I'll try to explain as best I can two key themes in privacy enhancing technologies that we've seen really come into the fore over the last 10 to 15 years. So one is what I was mentioning before. There's an area of homomorphic encryption which goes along with secure multi-party computation, which is often combined with federated learning. These are sort of phrases which may sound a little bit daunting, so there's some long words. Roughly speaking, they are ways to enable people to learn as if they were combining their data sets without actually combining their data sets. So a technical phrase which is sometimes used is different parties will never see the other party's data in the clear. So you can learn something. So if I have some data and Kate has some data, I could just train my model, Kate could just train her model, but neither of our models would be as good as if we could train on all the data together. What these new techniques allow us to do is in a sense to get the best of both worlds. It allows us to train a model as if we were sharing all of our data, but still I'll never see Kate's data and she'll never see my data. So that's really exciting. It's not a magic bullet. It does require more computation. It often requires a little bit of approximation to enable things to work. But increasingly, we're able to use those kinds of technologies to do bigger and bigger things in the real world. So that's very exciting. But I want to point out an important potential drawback that isn't always clear. So the fact that we can learn a model where I've never seen Kate's data and she's never seen my data, it doesn't mean necessarily that I haven't been able to learn anything about Kate's data. That's quite an important thing to recognize. That is, a common way we might do this would be that both of us at the end of the day would have the model. So we'd have all the parameters for the model learned from all of our data. And often the sorts of models which you might develop might be, for example, a big neural network which has many parameters, potentially millions of parameters. And it's often possible to learn something. If you've got the parameters of the model, you may be able to learn things about the data that it was trained on. So the fact that I've never directly seen Kate's model doesn't necessarily mean I can't learn anything about her data if I can inspect the model's parameters. And so while there are really exciting technical developments in improving these methods of secure multi-party computation, there's also interesting developments of people trying to explore to what extent they can recover information from those learned models, and then also trying to figure out ways to defend against that and improve methods to enable that. So that's one big theme. I wonder, do you want to explore that a bit now, or shall I go on to the second big theme that's also really important?
Sure. I think that's really interesting. I think it's not necessarily intuitive to people who don't work on AI themselves to think that, as you said, even if someone is not having access to this secure, sensitive data, that people might want to only be accessed for very specific reasons. If they have access to some kind of machine learning model that's been, trained using that data, or that's been used that data for some kind of analysis, it may be unfortunately a flaw in some of our machine learning techniques, in that just having access to the model itself, you could potentially find out information about the data that was used to train it originally. So I don't know, Adrian, are people starting to think about how to, best work on machine learning in ways that avoids this for, situations where you're doing analysis on sensitive data?
Yeah. And maybe I can try to give a simple example to make it a bit more concrete. Suppose the three of us, you, Ed, Kate, and I, Adrian, are... For whatever reason, we're playing some game where we want to figure out what's the age of the oldest person amongst us. I know it's actually pretty obvious who the oldest is, probably, but to people,
for the listeners' benefit, maybe not so
exactly
on Zoom. You're suggesting yourself.
Yeah, for the listeners' benefit, it's very likely me. But suppose we didn't know that, and suppose there are lots of us in a room. And we'd like to figure
Kate is disguised with a lot of makeup, so listeners just take heart. It is not as easy as we're making it sound.
Maybe you're not the only one wearing makeup. I don't know.
So here we are trying to guess each other's age, which, by the way, I must remind everybody is a protected characteristic. So it is the pinnacle of PII, personally identifiable information.
Right. So in a serious way, that this makes this maybe a good example. We could use homomorphic encryption or a secure multi-party computation approach, which would mean that while we did the computation, I would never get to see Ed, or Kate, your age, and you would never get to see my age. But at the end of the day, the output from this algorithm will be the age of the oldest person. And because probably it probably seems likely to both of you and me that I'm probably the eldest one here, when it outputs the age of the eldest person, you will have, with high probability, a lot of information about my particular age, and that is potentially a problem. So a different theme of work that was started by Cynthia Dwork and others also 10 to 15 years ago is called differential privacy. And the idea, which is very nicely crafted, because it enables us to achieve things which we want to achieve while protecting things we want to protect, the idea is, well, can we enable people to learn statistical properties of a set of people with high accuracy without being able to tell anything about any individual, or to a large extent without being able to tell anything about any individual. So an example for this might be, what if we want to figure out the average age of the three of us? Now here, the way this sort of approach typically works is that each of us is going to provide our own age, but not exactly our own age. We're going to kind of generate a random number. Maybe it's going to be a uniform random number between minus 100 and 100, and you're going to add it to your age, and then you're going to kind of put it into a box. Each of us is going to do that, and then the algorithm only has access to the numbers in the box, and when it takes the average of those numbers, because each of the random numbers we added had zero mean, the expected average of the number in the box will be the average of all our ages, but it'll have a lot of noise around it. And in the example I gave, where we added a random variable between -100 and 100, that's a lot of noise. So you can see that it's very unlikely you can learn anything about one of our individual ages. But if instead of -100 to +100, we'd added only a number between -1 and +1, you'd be able to tell a lot more. And you can see how, as the number of people increases, so if instead of the three of us, if there were 100,000 of us, even if you added a lot of noise, like -100 to +100 on everyone's individual age, elementary statistics will tell you that with high probability, the average that you get from the box, with high probability, will be very close to the true mean. And so that's very nice. You can provably demonstrate that with high probability, you will get an accurate assessment of the statistical thing you really want to estimate, which often is what you want to know. And yet also with high probability, you're not being able to tell anything about an individual. So that's very exciting. And these two themes of secure multi-party computation, which goes along with homomorphic encryption, those methods give a guaranteed cryptographic proof that you can't access data in the clear. But it doesn't imply that you can't infer anything about an individual necessarily. You can combine that theme with this other theme of differential privacy, which does give you a statistical guarantee of not telling something about an individual. You can do both of those together and often get nice results. Does that make sense?
I think so. Yeah. No, you explained certainly explained the differential privacy very well. I think I understand it better than I previously did. I didn't really understand it before, and it has come up in conversation with colleagues. So that was very handy.
And just it's worth saying that indeed this explanation has probably been the clearest and the most accessible that I've heard. But there's so much advancement in these areas that I've seen synthetic data sets that get generated using these techniques that Adrian just described, and it looks like magic even to a very seasoned technologist, and folks cannot believe that a synthetic data set can retain all the characteristics that are significant for the analytical work of the original data set without being able to see what was actually in there because enough noise has been introduced. And it's fascinating, right? And that's where, back to our literacy topic, what I would urge the listeners out there to do is get really curious, right? This is amazing science that happens right in front of our very eyes. And contrary to popular belief, financial services is kind of in the thick of it, right? We are on that cutting edge, along with healthcare, along with other industries, and figuring these problems out, both from kind of technical and scientific standpoint, but also against the backdrop of real customer impact, real regulators demanding a certain level of compliance from us, and real financial crime that we battle and real fraud that happens that we're trying to prevent. It's fascinating. So little plug for come and do data and analytics in financial services, because we are really, really fun. And the stuff that's happening is just unprecedented in my career, right? It's definitely not boring at all.
No, it is a really interesting topic, and it speaks to a lot of what we work at the Alan Turing Institute as well. There's so many areas of both, scientific research, but also, as you're describing, business analysis, where you may have access to these, highly sensitive data sets, which include, as you described previously, like personally identifiable information, which you don't want anyone but perhaps a very small handful of people to have access to, because this is not public information. You don't want this information to be available so that people can find out information about people. But you do want to have the advantage of collecting this data in terms of the insights you can get from analysing it, and using technologies like this, like generating synthetic data sets that retain the statistical properties of the original data, and you can then do your analysis on that. These, like I said, these are things which are being used, as Adrian mentioned, in healthcare and in other areas of science, just as well as financial services. I just want to, before I go back to you, Adrian, talk a little bit about. So one of the other technologies that we work on at Turing is something called a trusted research environment. So this is another technology that can help with this exact use case where you want to do analysis or science on sensitive data. This is what we do here is like we have basically a computing environment that different people can log into, but is it contains the sensitive data, or indeed it may contain pseudonymized data of some kind, but it's restricted in who can access it. So this is another technology that can be useful for analyzing this kind of data, because it means that so long as you have those restrictions in place, you know exactly who is able to access exactly what level of sensitive data. Anyway, I just thought I'd plug that as well. But I'll go back to you, Adrian. You had something to say about what Kate was just talking about.
Thanks, Ed, and thanks for mentioning a really important topic. These sort of trusted research environments are really key in a lot of areas, and it's something which we at Turing have developed and are open sourcing a kind of environment for. And we're very happy to work with partners on that. I just wanted to come back on one of the things Kate said. So first, I 100% of course agree that it's really exciting that we're developing new technical tools and methods which can really help all of us, and that is wonderful. But we also have to be, I think, a little bit careful not to oversell these techniques and make sure people are aware of the limitations. I actually consider that to be an important part of literacy, that people who are using these systems have to be aware of their limitations as well as their strengths. And so I just wanted to mention one thing about synthetic data. We could talk for a long time about synthetic data. It's a wonderful area, and there are lots of great uses for synthetic data. And just to be a little bit clear for listeners, what we mean here is you've got some data set, and it might be full of interesting properties. It might be on millions of retail bank clients, for example. So a very nice idea is that maybe you can learn statistical properties of that data set and then generate new data synthetically, that's why it's called synthetic data, in order to try to mimic the statistical properties of the original data set, with the hope being, with the intention, with the motivation being, that you can then use that data set just like you use the original data set, but that you don't have to worry about the personal data because you would hope that it's kind of cleansed of that. But a really important thing to highlight is that unfortunately it's not quite that simple. So in some ways, not in exactly the same way, but just I want to just at a high level clarify, just as in secure multi-party computation, information can leak about the data. Similarly, with the synthetic data process, information also can leak. And maybe one nice way to see this would be, imagine you had a population of 1 million people where, and we were looking at the heights of those people. And let's suppose in this data set that everybody except one had a height of 5'6", but one person was 7'6". If you wanted to have a data set that copied those statistical properties, there's no real way to do that without no way to do that with good accuracy, unless you're going to have a similarly low probability of this very unusual event. And so you will inevitably leak some information about that individual. So it's just one limitation to be aware of. And actually, for people who are interested in diving into this a bit more, we put out a report with the Royal Society. James Jordan was the lead author, called Synthetic Data: What, Why, and How, which you can find on the web if you're interested to dive into that a bit further. But while we're still talking about data and individuals' data, I wonder if I can bring up a really interesting topic, and I'd love to hear Kate's views on this. I'm happy to share our thoughts. So Kate has already brought up this idea of sensitive attributes and personally identifiable information, things like age. So of course, most big companies, including HSBC, are very keen to treat people fairly. That topic's already come up before. And one important aspect of that is knowing that you are treating different demographic subgroups in a fair way, where often those groups are indicated by these sensitive attributes. A fundamental challenge is that just in order to be able to check that as a starting point, you need to have that demographic data. So you need to collect it from individuals. And I know that that's a challenge in certain jurisdictions. I know in the UK, some people think you're not allowed to legally, but in fact you are allowed to collect legally in the UK. But even where you are allowed legally to collect it, of course, it raises reasonable concerns. Will people be comfortable sharing their data? Maybe some people will, some people won't. That can lead you to having selection bias, and that can cause trouble. So should you maybe think about using proxies for those variables? That is, you can try to predict those variables, but that has a whole load of issues too. I'd love to hear how Kate's thinking about that.
Well, you definitely opened the whole minefield of ethical questions, and we are indeed grappling with it, just like any other financial services institutions. I'll give you kind of a couple of examples to set the scene, I suppose. So one example that often comes up in retail banking is around duty of care towards vulnerable customers. And as you said, in order to identify somebody as vulnerable, you have to collect a fair bit of highly sensitive data and then correlate it with behavior patterns and things like that. So that's one of the open questions, and is how far does the consent stretch, and what is the role of the bank? And then kind of around that topic, one can also get some extra data sets. So for example, social media usage. And that could identify a pattern of behavior that suggests a gambling problem, for example. And it is a big ethical dilemma as to, first of all, should the bank even correlate those data sets, and or is it too intrusive? And even though it's impacting someone's financial well-being, it is frankly none of the bank's business to point that out, or shouldn't we? What's the regulation? What's the public perception on those topics? So it's very complex. And then kind of turning our eye to internal, to employees, and to inclusive working environment. There's been a lot of hot debates around ethnicity data, right? So it's a very, very hot topic. The way we collect ethnicity data in different jurisdictions, Adrian's absolutely correct. There are certain countries where it is not permissible to collect that data or to ask a person or to even give them an option. It is just completely off the menu. Whilst other countries, it's lawful to collect, but a question then comes up as to sort of what selections are provided to an individual, and are they able to find their ethnic identity in those selections, or even the selection criteria is somewhat biased. So I've heard a lot of discussion on that topic to say, well, it's nice that we're collecting this information, trying to promote and be fair and more inclusive across different ethnic backgrounds. However, the boxes you're giving me to tick are actually quite biased and steeped in certain historic inequities that they need to be changed. And then you are absolutely right, Adrian. If you collect in some places, don't collect in other places, and try to design perhaps development programs that are sort of focused on specific demographic or on specific ethnic background, are we then disadvantaging somebody else? So as I said, it's a minefield without very clear-cut answers. And the best we can do in the bank is we are facing into those questions quite openly. Like I said, we have an ethics committee that considers various use cases, specifically when AI is involved and when we're looking at different data sets. And we debate and discuss and have representation from our legal department to get the what's lawful and what's not lawful view, the risk folks, voice of the customer. We have some external advisors to understand what would be the perspective. And frankly, we also have to ask ourselves, is that something as individuals, if I heard of this, how would it make me feel? Because where it comes to usage of these data attributes and AI on top of it, I don't think humanity has an absolute set moral compass that's clear to everyone on all aspects of this very complicated space. So we're kind of trying to figure it out and apply multiple perspectives to get to the answer, that at least we can say this is how we reasoned to this answer. It might not be perfect, but this was our thinking pattern, and then see how it lands. But it's super complicated and very, very interesting because it's so complicated, because there are no clear-cut views here.
Yeah, definitely. And I think you mentioned earlier on that, if I'm getting it right, the HSBC is like the first big bank to publish its sort of ethical guidelines. Is that what you said?
Yes, we were. I know lots of folks have followed suit since and been very vocal about it. We had the ethical guidelines a few years back, and we've been very focused on not just leaving it as some sort of policy that sits out at the top of the firm and we're only communicating outwards, but really embedding those guidelines into our business as usual operations, starting to apply that lens and test our AI use cases, our machine learning use cases against the ethical principles to say, is it stacking up or not? And in the process, we didn't really revise the principles. They're quite solid to begin with, but we might have tweaked a bit of interpretation. But all use cases go through that sort of rigor of saying, is this, not only can I do this, but should I do this?
Yeah, absolutely. I think a lot of this comes down to transparency, right? So it's almost like if the principles and the guidelines are out there, even if, like, as you mentioned, not everyone in the world is going to agree perfectly with the HSBC ethical principles, of course, but they'll know what they are, and at least they can refer to them and understand what how HSBC are gonna interact with them in any particular interaction they have.
Can I just jump in on that? I think we should definitely applaud HSBC for putting out their principles. That's terrific. We're actually, probably many listeners will know that we're at a stage where there are hundreds of sets of ethical principles that different organizations have put out. The good news is that a lot of them are quite similar, and so that it's good that there's broad agreement. But I'd suggest that the broad agreement is really around very high-level concepts, which are hard to argue are bad. The most common things which are featured across them is transparency and fairness, or, similar phrases like that. But those words, those are great things. They're things which people want to have, but they're kind of slippery words that can be quite ambiguous. It's why we often hear, I think, politicians say that we want to have a fair society. Of course we want a fair society. Who doesn't want a fair society? But what exactly does that mean? So just like Kate was saying, I really liked how she was talking about it. There is no perfect answer. It's like saying, well, all we need to do is have a fair tax code, and then everything will be okay. Of course, what one person thinks is fair will be different to someone else, and that's reasonable. Different people have different reasonable views. What's important is to have a good process to try to listen carefully to diverse voices and understand people's hopes and fears and concerns, and then figure out the right way as a society to decide on how to do things. One thing I would note there is that absolutely, while we should applaud HSBC, individual companies, of course, don't have quite the same incentives as society broadly. And so it's important, I think, for all of us to try to get involved in this discussion. Just like Kate was saying, there are a lot of complex topics, and we need diverse expertise to get involved. People from technical side, social sciences, ethics, economics, law, lots of different topics, and of course just a huge diverse range of affected stakeholders. So one thing I'd like to do is just shout out to everyone who's listening to get involved if you're interested. Also just like to mention that on this topic of gathering demographic data and whether or not it's okay to do that, whether or not it's okay to try to predict demographic data from other variables. In the UK, the CDI, the Centre for Data Ethics and Innovation, is doing a specific project on that. So if you're interested in that, you could reach out to them, or I'm on the advisory board, so you could reach out to me if you're interested. And I wonder if I could just bring up a related topic that's very close to this, that also maybe helps to illustrate some of the challenges involved. So this is a problem that sometimes I think goes under the name thin data. I heard it called thin data by my friend Mike Ross. I thought it was a good description. So imagine a real world setting where a bank is trying to decide whether or not to make a loan to an individual. To a first approximation, a key issue is trying to predict whether or not the person is likely to repay the loan. And of course, you can use lots of data to try to do that. And roughly speaking, a bank will make that loan if they have sufficient confidence that the person is sufficiently likely to repay that loan. Thing to keep in mind is in order to have sufficient confidence will depend, that the sorts of information you need on an individual to get sufficient confidence will depend on that type of person. So maybe if I'm a white male living in a certain area with a sufficiently high income, maybe that's enough for the bank to feel, okay, that's fine. Statistically, that's plenty to have a statistically high probability of being able to repay the loan. But maybe if I'm from a minority group where, again, by definition, there isn't a lot of data on me, there's only thin data about me, just because of the way statistics work, you can't get as much confidence about that individual because there aren't many people like that individual. And therefore, to get the same confidence, you need to gather more information about that individual. You might need to ask more questions. You might want to, I'm not saying this is the right thing, but just Kate brought it up, you might want to look at their social media, or you might want to just ask them more information about their lives. And that's just a statistical thing. It's not with any ill intent. It's just trying to get to the same level of confidence in making the decision. But of course, that raises questions for society about whether that's okay. Minority groups often feel like they are subject to surveillance to a greater extent than other groups. And that is, of course, a concern. But I'm just highlighting that can naturally arise just through trying to get the same level of confidence. So that illustrates the complexity of the issues here. And I think it's important that we just discuss them broadly across society, particularly with the groups who are affected.
And I think, Adrian, that's key, right? That it is having that open dialogue, understanding what is the concern around sharing that data. And the concerns will be very, very different depending on what the individual's previous experience has been or that group's experience with banks or with government or with whoever is trying to collect that data. You've described probability of default beautifully. It's one of the key metrics in banking, right? That's what you're trying to figure out, is how much provision does the bank have to cover all the loans that will default, and what's the probability of them defaulting, and how do we make sure that we hedge? Because if we were only lending to folks that have zero probability of default, that the whole banking system wouldn't exist. You have to take a certain degree of risk, but that risk has to be well managed and calculated, because we have duty to the rest of the economic system and our customers as well.
I'm going to start to wrap up, but I just before I let you both go, I'll go to Adrian first. Is there anything else you want to mention before? And is there anywhere you want to point people, listeners, to where they can find out more about the topics we've discussed today?
Thanks very much. I actually really like that we're ending on this point of agreement that we need more engagement and dialogue, and I think everyone should try to get involved, particularly if you'd like to. Well, if you want to get involved in any way with your expertise, or just to help voice your perspective, it's really important to do that. You can find out more information about what we're doing at Turing. You can just Google my name. You can find my site at Turing or Cambridge. You can see what we're doing in Safe and Ethical AI at Turing. You can see what we're doing with HSBC in the Turing Fair programs. If you Google Turing HSBC Fair, you'll see what we're doing there. And it would be great to engage with people who are interested.
And same question to Kate, where can people find out more about this?
Well, first of all, I just wanted to thank you, Ed and Adrian. It's been a great discussion. We've covered nearly all my favorite topics. I think the only one that we need to get Ed to invite us back for is probably cross-border data sharing. So it's very near and dear to my heart, but in how these techniques are helping us be compliant and yet have that global view of what's happening across the data landscape. So just a couple of thoughts to leave everyone with. We are a business, and data is at the heart of that business. And it's really exciting to be on the forefront of a lot of these developments, to be working with the Alan Turing Institute and really shape the future. And one of the key shout-outs is that sustainability topics, right? It's super interesting. Please look up our sustainability commitments. Have a look at what Noel Quinn has to say, what other executives in HSBC have pledged and committed to our involvement with COP 27. And I think the main sites to find us is I'm on LinkedIn. I tend to blog, not too much, but kind of enough. But yeah, get in touch, get involved. It's a fascinating area, so and everybody's welcome.
Brilliant, thanks very much, and thanks again to Adrian and Kate for coming on the podcast.
Thanks for listening to this week's episode. The show is hosted by me, B. Costa Gomes, Ed Chalstrey, Joe Dungate, Christina Last, and Anika York. Music for this podcast is produced by Jam & Sun. You can listen and follow via the link in the description or by searching Jam & Sun on Instagram.